Okay, hello everyone. I'd like to apologize for being late. So if there's anyone still in the room, would you please type yes or Y to let me know that you're here? Just want to find out if anyone's here. Testing 1, 2, 3. I'm going to write this in here. If anyone is in the room, please let me know. Okay, I don't see anyone is in here. Catherine, are you here? Oh, good. Ah, terrific. Okay. Ah, I see. All right, let me apologize, okay? We had some problems with the platform and I don't know what else to tell you. So let me just get right into this. My name is Martin Rhymes and I just put away all my meeting materials. So let me just open this up and we're gonna get right to this, okay? No problem. Okay. So first off, this is Martin Rhymes. I'm the guy talking to you, and I want to thank you so much for being here today. Here is my trading room at the house. I also have an office because the internet is much better at my office than the house. But this is what if I'm on my own, I don't mind trading like this. But when I give webinars and teach, I must have the absolute best internet connection. My company is called Hit the Mark Trading. And basically what I do is I try to help people become their own expert, all right? And I do this in a variety of formats. So for one moment, let's just go to the website. Bear with me. So what I do is I have a trading course called Just Day Trade. I have a position trading course called Bootcamp. You just go to hitthemarktrading.com. I also have a nightly service. And so, for example, in the nightly market update, last Wednesday, I told people we have a buy signal in the YM. And I give where you would enter, where you would put your stop. It's a trading idea. And of course, you know what happened Thursday and Friday. The market went crazy, and that was a wonderful move. So this is basically a quick example of what I do. Now, if you want to get to know me further, I think you should consider go to the contact page, and you're going to have an opportunity to join this mailing list, and you can sign up for Rooster Call. Now, what is Rooster Call? Well, Rooster Call is my morning note to clients. In fact, I'll show you today's note. And what this is a trader's perspective on all of the current overnight news. And since I'm giving this away for free for about 30 days, I honestly think it's worth your time, okay? So, for example, in today's webinar, or in today's Rooster Call, I can get this up. I hate rushing, I hate being late, and I hate technology breakdowns. Here we go. So this morning I wrote about just a little bit about market background, a little bit about the euro and the drop in the euro. And it's interesting because the economic conference was hit the highest level in 17 years. A blurb about manufacturing orders in Germany. A little quote from the FT.com, Financial Times. A little my comment that there's a seasonal force at work this week that says the euro should go down. Talk about gold not adhering to the normal correlation that when euro falls, that means US dollar goes up and that means gold goes down. Making sure that everyone knows 1320 is a consolidation line in the sand for gold. And then a few other things to look forward to, including economic events. Now, this is all US economic stuff. Then I go into more detail on the markets, again, for a person who's starting the trading day. So I'm telling you right here, euro's fallen from 1.21 to 1.20205 as I write. The range is worth monitoring as a day trading candidate. And then I go through the other stuff. So how do you get this? How do you get this free? Well, the easiest thing to do is to go to the website. And if you don't want to register, then fine. Put your name and email, and in the subject, put Rooster Call. Please sign me up. Or you can sign yourself up. You will get an opt-in that gives me permission to send you this. Okay, so that's for 30 days. No problem, no credit card request, anything. All right, so enough about this. I'm here to talk today about how you can use trend and momentum into your favor, whether you're a day trader or whether you're a position trader. If you were with me on my earlier webinars, I discussed day trading, then I discussed position trading. Today I'm showing you a trading assistant. This is the Rhymes Range Bar Sniper add-on, okay? The Rhymes Sniper add-on. And if you look at this chart in front of us, it's the YM. Okay, immediately you should see, here's the signals. That says sell me. That says sell me. Here's two signals, sell me. Here's sell me. Now what happened here? Well, we were in tremendous consolidation. What the package has done is the package recognizes a low, a high, and a higher low. This is called market structure. And he says, forget it. Forget being short. Here's a short signal. Forget it. We've got this overriding pattern that is pretty powerful. And sure enough, if this is the buy signal, up we go. And this is what we do. This is what we do. If you recall in the earlier webinars, this would be a diagonal trendline break. Well, there's your signal. Okay? There's your signal. If you recall how I suggested that you take a trade and your profit, I'm sorry, not your profit, but your risk protective stop, you know that I suggest you put the stop just above this bar here. And that kept you in the trade. You were not knocked out here. So all you're doing now is you're saying, well, what's going on? Are we going to move? Trading is like a batter in baseball. You get up there and you got a great record. And every time you go to swing the ball, you hope to hit a home run. So I don't know if this trade is going to work out or not. I know that Mondays, as a general rule, are slow, which is why, personally, I don't trade on a Monday for exactly this reason. Now, let's just take a look over here to the left. The Canadian dollar, we were actually looking at this earlier because I have a trading real-time room for people who have completed the day trading course. Let me see if I can, let me see if I can clean this up. Good. So one of the things that we do, look at the sell. Here's a sell signal. Okay, well that didn't work out too well, but the next one did. Boom, absolutely. How about this one? Absolutely. If you trade Canadian dollar, whether you do Forex or you do the CME futures, beautiful. Once we get this and this, I can draw a line and just extend it out. And notice what happened. Price decides to go all the way back down. Now, here's another sell signal. Here's a sell signal. Gee, maybe you ought to, when you're trading, follow the trend. It's obvious it's going down. You knew that from over here. And just take the trend trades. So this is the Rhymes Range Bar Sniper, and it's giving you short signals and long signals. Now here's a clue. If this thing gives you several short signals or several long signals, it's a cluster, and it's telling you, I want to go lower. I'm telling you the market is going to go lower. So even though you see congestion up here, and I always like to mark congestion, when you're getting multiple signals, you're being told this market wants to move, it wants to move down. So just be aware of that. Okay, the dotted line, you're wondering what that is? That's the moving average that we use. I put the channel lines on here today. That's not drawn for you. I put that on today. I just like to see what the highway looks like. And then what we find is that, like magic, they take it up to the top and drop it. They take it up to the top and drop it. This is predictable herd behavior. Okay? If I've fallen outside of the channel and then I come back into the channel, guess what? Chances are I'm going to go to the top of the channel. This is not rocket science. Well, why didn't we get a signal down here? The reason we didn't was because there wasn't, the program has 16 decision points. And the program said, you know what, at this point in time, I want more confirmation that we are going to move higher. That's the only reason he did not get in earlier. Otherwise, as I taught you, if you were in my other course, here's a signal right here. So let's just find out, where is that? Vertical line. Let's see here. Line shapes. Vertical. Oh, red seems dramatic. So that's about right here. So there's our signal from the CCI. And all I did here was, or the computer did, was say, okay, I got a signal. I want confirmation. That's all he did. I want confirmation. And there's something else lurking about momentum in the background that I haven't covered. I cover it in my courses. But that was, we had tremendous downside momentum. That's why he was reluctant to take a long. Okay, so this is on any instrument. That we're currently looking at a 10 range bar chart. So let me just show you that if you're not a range bar chart person, I like this because the bars, the movement is all 10 ticks. It's all 10 ticks. It has moved within a range of 10 ticks. Therefore, all of my stops, I know exactly I'm going to be risking about the same amount on every single stop. What about something else? Well, what about the NQ? Now on the NQ, here's the NQ. My gosh, these are great signals, aren't they? So we've got a long here, up we go. We got a long here, yep. We got a short here. Now this one got locked into some consolidation. Another short here. Beautiful long here. Beautiful long here. You know, just gorgeous. I don't know what more you would really ask for. So what I'm calling this is a trading assistant, a TA. It's a trading assistant. So you now have the power in your hands of the software giving you suggestions. It lights up, look at the left, let me erase this. It lights up over here. Red means short, green means long. 10 means 10 range bar. 20, we look at some instruments with a 20 range bar. For the 5, I look at agricultural commodities or bonds with a 5 range bar. Sometimes I want to look at the bigger picture, not to trade off of it, but just to be aware of what's going on in the big picture. Well, there's a 15-minute chart. If you don't like range bars, no problem. If you want a 1-minute chart, okay, a 1-minute chart, we could easily do that too. I don't know if I've got 1 minute set up here or not. Let's see here. Here's a 1-minute chart. Okay. Now, I'm not going over the histogram because I've covered that before in my earlier lectures. That sound you just heard, I hope you heard that, is the computer notifying me that there is a new trade. So I look over here to the left and I find out, well, what's lit up? What's lit up? Now the bond market, we normally look at a 5 range bar, but let's just go to the bond market. Boy, that's a 1-minute chart. It's consolidation. Let's just see here. 10 range bar. There he's saying, go short. This is a bond market. Go short. By the way, is this a beautiful trade or what? Look at that short signal and boom, down we go. Quite nice. Very nice, in fact. Okay. I would have to say that I built in a conservative approach. You can see I drew this manually, the wedge. This is the problem with price right now. We're simply sideways. The market is not trending. It's going to be difficult. We know that. We know that. All right, so this is 10 range. Let me go to the 5. Whoops. Now the 5 range bar, what I typically do on this is say, well, if I get a signal on a 5 range bar chart, I'll go for 3 ticks, because 3 ticks, that's $93.75. Right? That's not a bad trade. But other times I'm going to look at this and say, well, I see the trading assistant is giving me suggestions, but I don't like it. I'll pass. Let's look at this area right here. Where is my geometric shapes? Okay. One of the things I've tried to do is build into this thing a way to get out of the chop. And so basically I say if we've moved 2 of these price bars only, that it's really not going to give a signal. But this you can easily adjust. So for example, when we moved out of this area, the blue area I just drew, he gave a signal because of this guy right here. Okay. Whoops, that's my, let me get my pen again. Okay. So because he moved out of the range, he gave a signal to go long. This is user defined. Maybe you want to make it a larger range. In other words, encompass 3 price bars instead of 2. So if you encompass 3 price bars, then you're not going to get that kind of a fake out signal. The downside is it may make you later than you'd like to enter the trade. So what he does is he's looking back and he's saying, how many bars have I been in such a tight range? So for example, he saw right here that he broke out of a sideways channel. He said, okay, we're ready. Go short. We got a signal. Let's do it. And that's a nice move. Let me just see this. Let's assume the worst case entry now. So $203, and I'm trying to make 3 ticks. Okay, that would have worked. Absolutely. Now, I don't always go for just 3 ticks. As a general rule on the, as a general rule on the NQ, I go for 15 ticks on the first contract, 30 ticks on the second contract, and if you want to capture more gains, beautiful, beautiful. You don't need to go out at 30. You can extend that out or use 3 contracts, take one off at 15, one at 30, and then let the other run. All right, let's take a look at the let's see here. Let's look at gold. Now this is a 5 range bar chart. I normally watch 10, but if the market is super, super slow, yes, I can back it off. What happens when we go from 5 to 10? Watch the chart. Watch the chart. Hang on. I think I'm in my drawing pen mode and I need to get out of that. Okay. When I go to 10 range, it just takes some of that noise out. Okay. Let's go back to the 5. And this is saying, well, it's kind of been so slow. We were monitoring this and noting that it just is too dangerous. We finally had a breakout. We finally had a breakout. So when you think it's very, very dangerous, I suggest that you do exactly what this computer program does. You box it up. So let me repeat how this thing boxes it up. He's saying, you know, this is pretty dangerous here. You better wait. Why didn't this trade work? Well, there's a wedge going on, and looks like he hit the bottom of the channel, pushed right back up. Until this gets resolved, you know, if you know anything about charting, you know to leave it alone. You know that it's just going to bang. It's just going to bang. Everything I do is very basic, okay? It's just going to bang. And I don't need to watch volume or anything like that. I just know through experience that when they finally break, it becomes meaningful. And what would I say in Rooster Call? I said that 1320 was the line in the sand. So all they've basically done the entire morning is keep the trade around 1320 until it finally broke. When you see that it's not moving, regardless of a signal, leave it alone. This is a trading assistant. He's there to say, look, according to what I'm being fed here, you got to move. But we have to, you know, we're not putting this all completely automated. We're going to say, no, you present to me the best case situation and I'll make the final decision. And then I'll decide to enter or not. And that's what we're doing. And when you see congestion, you leave it alone. You wait for congestion to break out. Okay. Let's go to anyone trade the hog market? What did I tell you about the cluster? What did I tell you about the cluster? The cluster is telling you, he's saying, I want to move up. Beneath the surface of the water, there is an undertow that wants to take this market up. That's what the cluster is. Now, this cluster is by design to help you see when you cannot see. So while most people see a sideways channel, the computer is saying we're just ticking it off. One more reason to expect long. One more reason. We're just checking the boxes, and then boom, up we go. So rather than look at this congestion here and say, oh, they all lost, they didn't carry. Really? What about the idea of where to place that protective stop? So we get a signal here. The stop is going to go here. Guess what? Yes, he was stopped out. Congratulations. You tried. It didn't work out. What about this one? Your stop goes right here. Okay. What about this signal? Your stop goes right here. Sweet. What about this guy? Your stop goes here. And if you've got the patience to sit this out, then you are, or I should say to sit here and watch it, if you are a big hog trader, you may not trade hogs. You know that, okay, I got another signal. What do I do? Do I add to the position? Do I sit tight? It's up to you. Here's the signal. There's two signals there. I've only taught you one. 3 signals, actually. You learned that in the course. Otherwise, you leave it up to the trading assistant. Now, when you are looking and you see that the ES moved today for 4 hours doing nothing, just a $200 range, and you look at the other instruments and you see that gold did nothing for hours, and you see, okay, well, the euro fell hard starting Sunday evening, and now, that horse is out of the barn. It then, in U.S. market hours, just did hardly anything and finally started coming back up. What you're being told is everything is just slow. What do we do when everything is just slow? We think it's a nickel and dime market. We lower our expectation. We don't think, oh my gosh, we got a signal. This is just going to go all the way to the moon. That's really not very responsible. You have to be able to read the market. That's one of the things I try to point out in the rooster call. Okay. All right. Let me just go back to this. Whoops. Erase. Let me see here. Now, there's that bond short. Let me just show you what happens when you get a short signal. Okay. When we get a short signal, don't let this scare you off over here. I am not about to have this kind of a stop, okay? That's ridiculous. We just had an update, a major update to the software. I need to make an adjustment on this, not on my program, but on from the update. I need to change this back to where our protective stop would probably be probably something like this initially. Now that's 2 contracts. If you don't think that you want to risk that much money, then you don't play in the bond market. End of story. So this is 2 contracts. Now he's saying these are some suggested profit targets. The other thing I'll do, and this is what I normally have loaded, is if I sell, this is more like it. Okay. What he's doing is he's saying, I'm going to sell here. My initial hard stop is 1375. Initial. That doesn't mean you have to live with that. You can move this to wherever you want. Make this where you can see it. And then he's saying my first target is $250. The second target will run, and the second target will trail. And I've got the trailing stop, the red line. All built in. Let's go to something else. This is the wheat market. Now the wheat market, nothing's moving today. Nothing is moving today. Do you see how you got a signal and automatically you have the, let me get rid of this. Automatically you have the order loaded for you. Okay. And again, you look at this and say, well, I don't want to have the stop up here and risk $300 a contract. That's up to you. This is the way it's set because this is typically an extremely good protective stop. That's something you need to really test on your own. And by the way, on the grains, I do typically go to 5 range. Okay. So here's a 5 range bar chart. So this thing says if I go short, I'm going to make $100 off my first contract, and then I just let it run. And this is how you get the bigger moves, using the runner. Okay. All right. Let's measure this one over here. And this is the power of using the runner. So until we got into congestion, about almost $400. Now before you say, well, you mean you're risking $600 to make $100? No, it's not like that. I mean, in one sense it is. But in day trading, momentum trading, we're not going for a 2-to-1 win ratio at all. What we're going for is the idea that we're using momentum. It is totally different from position trading. Position trading, yes, you can have that 2-to-1 all you want. But in the day trading, you're saying I'm using trend and momentum. And